Hey everyone, in today's video, we're testing an awesome oscillator strategy. We'll walk through the entire process, from explaining how the strategy works, to optimizing it using Freqtrade, an open source trading bot, and finally running backtests to see how it performs. If you're looking for a full, beginner-friendly Freqtrade tutorial, check out the link in the description below. Before we explain the strategy, let's first break down the key indicators we'll be using. 1. Awesome Oscillator. The Awesome Oscillator is a momentum indicator developed by Bill Williams. It measures market momentum by comparing the 34-period and 5-period simple moving averages. Rather than using closing prices like many traditional indicators, the Awesome Oscillator uses the midpoint of each candlestick, which is the average of the high and low prices. It then plots the difference between the 5-period and 34-period simple moving averages of those midpoints. The result is displayed as a histogram that fluctuates above and below a zero line. When the Awesome Oscillator is above zero, it suggests bullish momentum. The short-term average is above the long-term average. When the Awesome Oscillator is below zero, it indicates bearish momentum. The short-term average is below the long-term average. 2. Moving Average Convergence Divergence, MACD. The MACD is a popular momentum and trend-following indicator that shows the relationship between two moving averages of a security's price. It is calculated by subtracting the 26-period exponential moving average from the 12-period EMA. The result of this calculation is called the MACD line. A 9-period EMA of the MACD line, called the signal line, is then plotted on top of the MACD line, which helps identify buy or sell signals. When the MACD line crosses above the signal line, it is considered a bullish signal, suggesting it might be a good time to buy. When the MACD line crosses below the signal line, it is seen as a bearish signal, indicating it might be time to sell or exit. 3. Relative Strength Index, RSI. The RSI is a momentum oscillator that measures the speed and change of price movements, typically ranging from 0 to 100. It is commonly used to identify overbought or oversold conditions. However, in this strategy, instead of focusing on the traditional overbought and oversold levels, we use the midpoint level of 50 as our key signal line. When the RSI is above 50, it indicates bullish momentum, suggesting buyers are in control. When the RSI is below 50, it signals bearish momentum, meaning sellers have the upper hand. By combining the Awesome Oscillator, MACD, and RSI, we create a strategy that captures momentum shifts and trend changes more effectively, helping us identify better trade opportunities with higher confidence. Now that we understand how each indicator works, let's walk through how we apply them to identify trade setups and signals. To enter a long position, we wait for all of the following conditions to be met. 1. Awesome Oscillator crosses above zero. This signals that bullish momentum is starting to build, as the short-term momentum overtakes the long-term. 2. MACD crosses above the MACD signal line. This confirms that the trend is gaining strength and a potential upward move is underway. 3. RSI crosses above 50. This filter confirms that overall momentum has turned bullish, helping to avoid false signals during weak or sideways market conditions. Once all these conditions are met, we enter the long trade on the next candle. After entering the trade, we place the stop loss just below the low of the signal candle to give the trade some breathing room and avoid getting stopped out by normal market fluctuations. We subtract 2.5 times the average true range from the closing price of the signal candle. This ATR-based adjustment helps account for volatility while still keeping your risk under control. For the take profit, we use a 2.5 to 1 reward-to-risk ratio. This means the distance from your entry to the take profit level should be 2.5 times the distance between your entry and the stop loss level. When the price closes above the take profit level, we exit the trade and lock in profits. To enter a short position, we wait for the following conditions. 1. Awesome Oscillator crosses below zero, indicating bearish momentum. 2. MACD crosses below the signal line, confirming downward trend. 3. RSI crosses below 50, confirms bearish momentum and helps filter out weak signals in choppy markets. Once all conditions are met, we enter the short trade on the next candle. Stop loss is placed just above the high of the signal candle, adjusted by adding 2.5 times ATR to the signal candle's close. Take profit follows a 2.5 to 1 reward to risk ratio. We close the trade when the price closes below our target level. Now that we understand the strategy, let's move on to optimization using Freqtrade. We'll test on the 1-hour time frame and split the data into in sample, 8 months, for tuning the strategy, out of sample, 4 months, for testing on unseen data. Key parameters to optimize include AO rolling window and RSI MACD rolling window. These define how long a signal remains valid, since crossover events don't always happen at the same time. RSI threshold helps fine-tune momentum confirmation levels for better trade filtering. ATR multiplier and risk ratio, used to dynamically calculate stop loss and take profit levels, helping balance risk and reward more effectively. We'll use Freqtrade's HyperOpt feature to find the best combination of these parameters. Once optimization is done, we'll run a full backtest to see how the strategy performs with the best parameters in place. All right, let's take a closer look at the backtesting results. We ran the backtest on BTC perpetual futures, using the 1-hour time frame over the past year with the optimized settings. Here's what we found. The strategy delivered a total profit of 189%. For comparison, the market itself returned around 54% during the same period. The maximum drawdown was 15.68%, which means the strategy did experience some pullbacks, but overall, it managed risk well and stayed profitable. Now, let's take a look at the visual summary of these results. This strategy was optimized using 8 months of in-sample data, then tested on 4 months of out-of-sample data. That helps ensure it's not just curve-fitted to the past, but also performs well in new, unseen market conditions. If you'd like access to the full strategy file, along with the complete step-by-step Freqtrade tutorial, it's available to supporters through the link in the description. It's a great way to support the channel, and in return, you get everything you need to build, run, and customize this strategy on your own. There's also a pair-optimized version available, so you can run it across multiple trading pairs, each with its own fine-tuned parameters for better performance. If you found this video helpful, don't forget to subscribe, turn on notifications, and share it with your friends who might find it useful too. Thanks for watching, and I'll catch you in the next one.